Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to look at Twitter, see what information people are sharing, give you my opinion on the information that they're sharing, and we'll do some analysis. We'll throw some analysis in the mix on the S&P 500 and how that thing has fallen and progressing. Maybe we can play around with it. Again, I just use that to play with the herd mentality, the psychology of how it falls, what it looks like in the patterns. But let's dive in there. I'll give you my financial opinion. And if you guys are interested in signing up, platinum membership, finding-value.com. We do have the midweek update is just out there. And then we've got a 5 p.m. Sunday, 5 p.m. Mountain Standard Time, platinum members question and answer session. So we'll see you there if you're not already there. So here we go. This is Finding. If you want to follow me, it's at Finding_Finance. You can follow me there. So let's start off with individual investors recently increased the share of cash in their portfolios to 25%, the highest level since March 2020. Now, we've gone up quite a bit in cash levels. If you are a contrarian, this is where you have to be brave. But I'm not in the S&P 500 bull camp at all. I still think, well, I mean, it could obviously bounce. It could do certain things. I'm just not in the bull camp of that. I much prefer energy, commodities, precious metals. That is where the market conditions are showing me the value is. But under these market conditions where bonds fall and stocks fall, your cash is being raised to a level. Usually where there's cash on the side, that's what gives you fuel for the next bull or next leg higher. So we do have lots of cash on the sidelines. Now we've got this, where are we in the market cycle? We've got this big old move higher. Now we're starting to kind of crash back down. Where are we in this cycle? If it were me and I were to take a guess, we're in the anxiety denial stage, somewhere in that range. So let's take a look and see what I've pulled up for the S&P 500. Here's the S&P 500. We've been pulling on back, just like I said in 2020 and 2021. I said, this is going to roll over. We're going to see it pull back. People were telling me that there's no way Apple could pull back. It's a cash flow machine. I said, it is being priced off of interest rates that are incredibly low. And when interest rates go up, this will roll over. And they're not done raising interest rates. So we could still see this fall over and go a lot lower. So what I'm going to do is I'm going to grab the crisis back here, the last bear market of 2000 to 2003. We're going to take that. I'm going to copy it. Or actually, I don't have to copy. I can just drag it to the right. Let's zoom on out here. Scroll on over. So I'm taking the last bull market. I'm going to overlay it here. And like, okay, this is going to be kind of tight. Let's see how this aligns. This aligns. Something on the lines. Okay, let's go here. Could be something like this. Let's see how well it overlays. So here is the market here. We're just seeing how this thing overlays. Okay, so if that overlays like this, it looks pretty close to this overlay here. So I'm going to blow it up just a little bit more. So maybe something on the lines of that, of what we could expect out of this. And, obviously I'm just doing this for fun. It's not supposed to be meant for anything. And I don't know, if I squeeze it up, it doesn't look like it overlays too well there. This really is where it looks like it overlays. And this here could obviously be squeezed on up. It looks like everything is squeezed on up from a perspective of squeezing it this way, where it could be squeezed a little bit more and put in that type of thing. And if somehow we can shrink it a little bit, but I think it's somewhere on the lines, if this all matches up quite well for a move similar to that. So that's probably what we have ahead of us if the herd mentality is to repeat again. And I'm willing to bet that's going to be something close on that lines. 2023 is probably a bottom. This is going to take some time to play out. Then we'll roll on up, and we'll move sideways, I think, for the next 8 to 10 years. It's going to be very similar to this last market that looks something like this. So it's going to be a sideways action. This topped out at 2000, and it didn't break it till 2013. So something on the lines of this sideways action in the overall markets. So that's that. I think we're in the anxiety denial stage, somewhere in that range. Why am I getting margin calls? My investments are with great companies. They will come back. And then the panic it's coming. This is not top of cycle rhetoric. This isn't even mid-cycle. We're not even halfway. You should be prepared for this to take many, many years to play itself out. Society hasn't even begun to learn the lessons it needs to learn. We intend to impose a solidarity tax on fossil fuel companies. He's talking about how early we are in the move of oil and energy. And these guys, I don't know why they're trying to tax this. They're just going to make it worse. We're short energy, we're short oil, and with the inflation out there in terms of paper dollars chasing fewer things, this isn't going to play out very well if they start taxing the crap out of it. Coming down, it says, Dario Perkins, people hated this chart when I posted it 12 months ago, but I still kind of like it. Based on history, either inflation has to come down, transitory, or equity valuations are in trouble. Still a ways to go. And that's what I was doing up here in terms of where we are in this cycle. It's also being validated through the core PCI inflation. So this is your core PCI inflation. This is a scatter plot. This here is PE, cyclically adjusted PE, versus inflation. So inflation's the y-axis, the PE ratios, the x-axis. The red dots are where we are moving. So we're moving our PE ratio to the left as the inflation PCE goes up. Now, if we're way up here, we need to move to the left dramatically and take off a lot of price to earnings. Now, the price is what's going to balance this out. I don't think it's going to come from the earnings. So we're probably going to move left and up to the up. We're going to move up and to the left. And we've got a long ways to go for these data points to match up with history. So I think this is a really good way to depict where we are today and where I think we're going to be in the future. We have a long ways to go down. It says Biden administration to provide over $13 billion in aid to help American families pay energy bills, fighting inflation by printing more money or more inflation. That's a great way to solve this. Really, really deep thinker here with Biden pulling out more money, open up the blank checkbook. Let's just start paying people's bills. I mean, that's going to bring down energy prices, right? Let's give, American families a bunch of money to basically try to outbid each other. I mean, I don't know what he's trying to do. Maybe we're trying to go for $250, $350, $450 per barrel of oil, but it is what it is. I like this guy. How is oil not over $100? It will be soon. It will be soon. It says, we remain bullish for Eric Nuttall. This is your crude gasoline distillate inventory deficit to the 4-year average. We are still at really low levels, eating through our inventories. And this here is saying that we don't have enough of these three, and we're eating through it. Price is too low. And the SPR, when that's done, well, we'll see where the real price will end up. George Gammon here says, let's fight inflation by doing more of what created the inflation. That is about the energy bills. He's going to provide over $13 billion in aid to help American families lower energy bills. Here's Grady. He says, Fed wants to raise rates as inflation plus yields are rising. But they cannot raise rates because of debt payments. And they cannot increase QE because of big inflation. and they cannot taper because of the bad economy. Good luck. They probably want to save the stock market, though. It says, while everyone is freaking out about how insanely hawkish Jay Powell was, take a look at oil and the 30-year. They're saying he's still being too dovish. We're about to crash SPZ and oil rallying the whole time. Good night, passive. I won't swear. So it's good night, moon. Here's another one. It says buy silver. Keep stacking physical silver, all apes. Last, we will win. This is the COMEX registered silver stockpile down to 38.13 million ounces. We have gone through a massive amount of inventory, and we are continuing to draw down, much like oil, much like copper, much like basically any commodity there is out there. Platinum inventories are heading lower, silver inventories, and you know what? I'm buying me some physical. Why? Because I don't know if there's going to be a good way to get your hands on some at some point in the future. We're seeing premiums go ballistic, and I'm still out there finding deals. So I'm going to find deals through private parties. I know how to basically tell if silver is real or not. But yeah, that's what I'm doing. Definitely check out, Scott and I talking about this stuff. It says, I really think the West is suppressing gold and silver and other metals as a form of economic war against Russia. Only time in history we've had 7 straight down months in gold, and it just happens to align with the conflict of Ukraine starting. Fortunately, this can't be kept up. And there we are, 1, 2, 3, 4, 5, 6, 7. That is gold. And what we've got over in Russia is they want to back currencies with commodities and precious metals. If they do that, they, I think, are going to bring down the dollar if they're successful. But I think they're going after it, and I think Jay Powell's probably trying to protect the dollar there. So that's what we've got going on in the markets there. Here's one that says, when investing, you need to focus on trends that are inflecting positively. Why are so many guys still bag holding tech? Tech will only get worse next year. Meanwhile, look at offshore energy service companies. They're silly cheap, and they keep inflecting positively. That's Tidewater and Valaris that he's got there. Obviously, I sat down with Fabi. That's out there. I think we've talked about this one before. The 2022 is the worst year for 10-year U.S. Treasury since 1788. Crazy. It says the FT scoop on Glencore Tesla shows how the eucalyptus paradox is snowballing. Where are all the metal units going to come from? The West thinks they're just there, but cost of capital, lack of projects, not in my backyard. Tesla, Vale, base metals, NR will be fun. And this one, I really like this chart here. This one says oil is headed much higher, north of $200 into the end of this decade. He took whoever did this, took the bottom to the top, and it runs it to 240. What we have here is a large consolidation period. We've broken out. We've done a back test off this, and now we could be heading higher at any point. Totally agree. Big oil bull. This is oil that we're looking at, and it looks really good. So that's where I'm going to end it. I'll end it there. And if you guys like this kind of content, definitely give me a thumbs up. Subscribe to the channel if you haven't already. And, catch you guys on Sunday, 5 p.m. Join the community if you haven't already. Bring your questions. I'll answer anything. I'm here to help you guys out. And I'm holding on, guys. I'm holding on. I'm riding through it. I am a big energy bull and precious metals bull at this time. Physical metals is what I really like. And I really like the energy, oil, natural gas, uranium, all of it. All right, guys, we'll catch you next time. This is Finding Value.